Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some more of the stocks that were in play on Friday. Yeah, so if you take a look here at the first stock, we're going to take a look at BIOA. This was really heating up on Friday. It did pull back from high of day, and it did end up forming a doji. So if you look here on the chart, you can see it's been trading in this nice steady uptrend. The middle Bollinger Band turned into support back here in September, and then it held as the share price has been slowly climbing higher. The big development was the close on Thursday above the bottom of the gap level and above this closing price here on the 12th, and so that was signaling more upside potential. And so what we were looking for was a break above the top of this channel, this red ascending resistance line. Notice the share price closed right at that level, and there was a gap up open on Friday, and a doji did form. And so when dojis form during an uptrend, after a gap up open, it does form. We could look here at the bearish doji star reversal pattern. So yeah, this is this pattern does signal potential downside risk. The candles could work their way back into the bands. What we'd like to see is EMA 4 at 63 hold. That's lined up with the closing price on the 12th. Also a big level to hold is the bottom of the gap, which is lined up with EMA 8 at 60. As long as this middle Bollinger Band down here at 54 holds, the uptrend is intact and should continue. It's just the doji signals that it could possibly consolidate and pull back into and test this bottom, this ascending support line, which is lined up currently with the right around EMA 13 at 58. Now this could just be a pause in the uptrend. And you notice that there was a giant volume spike on Friday, so the volume is signaling more upside potential. Keep in mind, volume does precede price, and so what we're looking for is we'd like to see support hold here, and then this gap fill. There's a big gap between the low of day on this candle and high of day on this candle, and so a gap fill would put the share price up here around 97 or so, and would test dollar land. As long as this 50-day simple moving average holds down here at 49, then the 100-day simple moving average is the ultimate simple moving average target. As long as the uptrend continues. If the share price drops below that level, then that would signal the chart is broken. So keep an eye on BIOA. If you look here at the 15-minute chart, you will see here that on Friday it formed a double top. So it had the open here, it pulled back, it tested the middle Bollinger Band, and then it came back up to this level, the high close level, and it did break above at 230 and 245. Those candles, as well as the candle here at 315, they all closed above high close horizontal resistance. So it was signaling potentially more upside. More upside. We want to see that level hold. Notice that there was this ascending triangle pattern, and then the candles were wedged between ascending support and horizontal resistance, and that level broke on the close, and there was a close below the middle Bollinger Band. So that was not the close that we were looking for. It looked like this 245 spike was a climax spike. Notice there was a low volume leading into an increasing volume pattern with a big spike at 245. You've got the long upper wick followed by a red candle. Those were all signals that people were locking in gains. So now what bulls want to see is the 65 level hold. Notice that the 65 zone was big support. Right below it is the 50 simple moving average at 64. That's the big level to hold. If it drops below that, then that will signal the chart is broken and that it's cooling down and consolidating. Not that the daily chart's broken, just that there's potential reload levels lower. Now to the upside, what bulls want to see is a break above the 69 and 70 resistance zone. If candles start forming above 70 on Monday, that's going to signal that it wants to head higher. It really needs to hold this up middle Bollinger Band currently at 675 to keep the uptrend intact on the 15-minute chart. Okay, take a look at AVGR. Okay, so this stock, it's in the bull zone here on RSI. You've got RSI at 54. It's been in the bull zone for a while. We're looking for a break above 50 on Fasto. There was a bull cross on ADX with the green line crossing the black line to the upside. So this had the classic bull trap black candle on Friday. You know, it was a healthy gap up open up here at 40 cents. You know, a little run at the start of the day, but the bears were in control and they drove the price all the way down near low of day. Notice there's a gap between high of day on Thursday and low of day on Friday. A drop down to around 33 cents would fill the gap. And so this might fill the gap first, and you could get a bounce off the middle Bollinger Band currently at 334. And then in order to head higher, it needs to close above this high close current resistance level, which is also lined up with the 100-day simple moving average at 0.377. That is the big level. It failed to close above that level on Friday. You know, it's hit that level multiple times since support broke. It has to turn the 100-day simple moving average into support to head higher. If it can next week, that's going to signal more upside, and then we're going to be looking at this high close here at 46, and then you've got 55 up here, the top of this candle, and then you're looking at this candle over here, which is around 66 cents. Those are the upside targets. As long as this middle Bollinger Band and 50-day simple moving average, this green line are holding, there is more upside potential. If it drops below the 50-day simple moving average, that signals the chart is broken, and then you're looking for a gap fill from this previous gap. There's a gap. This is the top of the gap up here, and this is the bottom of the gap. So a drop down to about 24, almost 25 cents would fill that big gap below. So a close below the middle Bollinger Band and the 50-day simple moving average would be a big red flag. So take a look at SRAX. Okay, so this stock is in this really strong uptrend. You know, it still has, even though it's pushing higher and it's in this uptrend, it still has RSI here at 66, and you've got Fasto at 65 with the bullish crossover. So they're both, and neither one are overbought levels right now. But look at this really nice uptrend. So that's signaling there is more upside potential. And so what's going on is it keeps pushing higher, pulls back, pushes higher, pulls back, pushes higher, pulls back, and it's been repeating this process over and over again, holding basically EMA 13 support. That's this orange line. It's currently at 338. It's lined up with the bottom of this channel, this uptrending channel. That's the green ascending support line. Notice that the share price has turned this blue line into support. That's the 300-day simple moving average at 350. As long as candles are staying above that level, that's very bullish. It's signaling more upside potential. If you see a drop below the 300-day simple moving average, it's going to be a major red flag that consolidation is coming. It needs to hold this middle Bollinger Band at 297 to keep the uptrend intact. To the upside, the closing price here on the 17th is the key level to break. It's around 490. If you see a close above 490, the top of this channel now is up here around $5.80 to $6. So we'd be looking for a push up here to $5.86 if it can break above this 490 close. Okay, so if you look at the SRAX weekly chart, this is showing you the resistance levels to break. Notice that this has been filling the jar. It had this big drop here. Basically what happened, it was above the middle Bollinger Band in December, and then support broke, and then it turned into resistance, and a huge downtrend followed. Okay, so it retraced all the way down here to $1. It was testing dollar land level. It held support here, and then what you had was a close above the middle Bollinger Band in September. That was the bull signal. That's the key level to load. You want to load when you see a break below the middle Bollinger Band. You want to load on that close back above. That signals the start of the uptrend. Just like this signaled the start of the downtrend, the close below this red candle on the second week of December. The close above the middle Bollinger Band on the third week of September was signaling that a new uptrend was beginning. And so that was the key level to take an entry position. And notice that you could have been riding the swing trade higher. Currently, the share price is hitting the 100-week moving average at $5. That is the big level to break. It's also set up with the closing price back here in January. So if you can get a weekly close above the 100-week moving average at $5, that puts the 200-week moving average at $6.14 on deck. Notice that the candles have been filling the jar back to this previous level. This previous close before this all broke down was up here near the 200-week simple moving average. Notice that there was a big giant volume spike this week with a long upper wick, so there was some profit taking. If the candles do work back into the bands and fail to break that 100-week moving average, you want to see the EMA4 at 327. That's actually the first big support level below. You do have support here at 375 from this high close. There will be support at 375 or 4, but the first moving average support level is going to be EMA4, and then it's really important that the 50-week moving average at 277 holds. You want to see that level continue as support. Okay, take a look at INPX. Okay, this stock had a really bullish move on Friday. It's still at 65. It's below the 70 overbought level. It did correct on Fasto with the upper wick on the candle. It had a nice 3-day run into the close of the week, and then the bullish development was the close above the closing price on the 26. So that was the high close resistance level to break. Notice it was forming the ascending triangle. So the close above horizontal resistance does signal more upside potential. The upper wick on the candle almost hit the 100-week moving average. That's the next key level to break at 66. If it fails to break that level, you could see it consolidate. It's really important now that the candles are above, if there was a close above the closing price in the 26, that level turns into support. If you see it close back below that level in EMA4 at 47, it could consolidate. It needs to hold the middle Bollinger Band at 39, which is lined up with the ascending support line in order to keep this uptrend going. If you see it close below that level, you could see a drop down to the 50-day simple moving average at 31. Okay, so yeah, it's got a nice uptrend going. The break above resistance on Friday does signal more upside potential. Okay, take a look at VHC. Okay, we're keeping an eye on this stock for a close above EMA4. It's currently at 583. It's the pink line here. Notice that this had a big pullback. It had the bounce on Thursday, but it failed, and the bounce on Thursday was from down here off of the 150-day simple moving averages, but it failed to close back above this pink line at 583, and so it has to close above that level to head higher. If it fails to close above that level and it remains resistance, that's going to signal downside risk, and there is a gap down here. Notice that the lower wick in this candle did not fill the gap. A drop down here just below $4 would fill the gap below. If the middle Bollinger Band currently at 610 remains resistance, that's going to signal that a new downtrend has started. With the close below the middle Bollinger Band here on the 17th, that signaled downside risk and a possible new downtrend starting. So it has to get back above that level to get an uptrend going again. So keep an eye on VHC. We're looking for a potential bounce. We want to see a break above EMA4. If you look here at the VHC 15-minute chart, you can see here it's been trading in a very tight channel since it hit the 100 moving average here, the gold line. It had been turning that level into support, and so notice this is the high close horizontal resistance level to break is 590. It's the top of this channel, and then notice in the close the candles did close above the green, the gold, and the dotted purple line. So it closed above the 50, the 100, and the 20 simple moving averages. The middle Bollinger Band is also the 20 simple moving average, and so it was turning these levels into support on Friday. And so if it can hold this 560 to 570 support zone, and it can break above 590, that's going to signal that it wants to head higher. If you see a drop below 550, below this 100-week moving average, that's going to signal a downside risk, the chart's broken, and that you want to go to the sidelines. So keep an eye on VHC, and then finally let's look at INFI. This is a similar chart to VHC. It had the big move followed by the big pullback. You can see here it had this cup and handle pattern that formed, and then here's the neckline. The close above the neckline in October here was the signal that wanted to head higher. It turned the neckline into support and broke out, and then after the big close above the upper Bollinger Band, the candles dropped all the way down to EMA 13. They've been holding this orange line here. If you see a close below EMA 13, that's going to signal downside risk. Down here, there's this big support level between the blue, dotted purple, and red lines. That's between 170 and 190. This is the 300, the 20, and the 200-day simple moving averages. Those levels are crucial to hold. Notice that the gap there's a gap here between the top of this candle right here and the bottom of this candle up here. The bottom of the gap is at 170 and it's lined up with the 300-day simple moving average. So once again, it has to close above this pink line, EMA 4 at 238. If it fails to close above that level, you could see a potential gap fill. So to the upside, it has to break 238 and it has to hold 218. So above 238 signals more upside potential. We'd be looking for a potential run up here to 330 and the top of the upper Bollinger Band. You've got high close resistance up here on the top of this candle. But to the downside, if you see a drop below 210, below 218 and EMA 13, then you could see a drop all the way down to 170. If you look at the INFI 15-minute chart here, what you can see is the descending triangle pattern has formed. Okay, so notice there was the spike on the 19th, and then it's been making a series of lower highs. It did break above that level, and we thought maybe it was going to push higher on Friday, but it dropped back below, and it actually closed back below the 50 simple moving average, and it's at the bottom of the channel. So the bottom of the channel is down here above 225, around 226, 227, and it needs to hold that level. Just below is the 300 simple moving average. That's the huge support level on the 15-minute chart. It usually holds when tested. If it breaks and turns into resistance, then that signals the chart's super broken and there's major downside risk. Now that it's at the bottom of the channel, look that there was a big volume spike on Friday, so it looks like some people loaded. Keep an eye on it. It needs to break above some key resistance levels to get going again. The top one's going to be, the top two are going to be this high close resistance level, about 252, and then the 200 moving average, simple moving average at 258. And once it trades above both those levels, that'll signal that it's ready to head higher. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.